Hi everyone, it's Grace. Welcome back to my channel. So in last week's video, I provided you with very important updates to which cities are literally having a housing crash right now. Those cities are very overvalued and there's not enough inflexible demand that's supporting them. And so that's why they're behaving this way. And if you're looking at the mortgage rate, it goes up above 5% again, which is a direct result of the Fed funds rate goes up to 2.33%. And I think that this is very important because in order to reduce the inflation rate to the target 2% of the core PCE, remember that the Fed does not look at the CPI. Although I personally think that CPI is more useful for average people than PCE. So in order to bring it further down, the Federal Reserve has no other choice but to keep raising rates. So unfortunately, we have to live in a high inflation environment, but I think that it's the best solution because it allows the market to correct itself and it generates relative stability for the financial markets and the whole economy as well. All right, so you can click here to check out that video. So in today's special edition video, I'm going to summarize all the videos that I have done related to the government policies as well as their market reactions. So it gives you more control over what the government likes and dislikes. Remember, any type of investment into any type of asset types that you are doing, you have to understand what the macro policy is and what the geopolitical environment is. Is it in favor of your decision or is it against your decision? Before we begin today's video, remember to subscribe to my channel and click on the bell button so you get notified immediately when new videos like this are uploaded. Also, feel free to give this video a thumbs up if you find it useful. Another way to support my channel is by donating any amount that you feel comfortable with, either through PayPal, Cash App, Zelle, or QuickPay. And I'll provide links in the link tree down below. All right, so let's get started. So the first government policy video that I did was exactly a year ago, back in August 14, 2021. Remember that was when the Delta variant was reaching a new peak. And then the moratorium for the eviction and forbearance was in place for several months already. But the government, for some reason, wanted to further extend it. And my forecast back then was that if it was further extended, it will cause a major housing crash. And this is the reason why. This is not helping the economic recovery at all because it's sort of like a running out of option policy. Because renters are already behind on their rental payments, and landlords are also behind on their mortgage payment. So it will only bring the foreclosure wave sooner. Number two, moratorium extension and the low distribution rate of rental assistance are a bad combination. Let's first take a look. So this is basically the video. I provided more reasons to why it will cause the market crash. I'm also going to provide a link so you can click into it and see. What's interesting about this video is that it's open source, right? So anybody can watch it. And then I can also get a reaction from the government. And then exactly like 2 to 3 weeks later, the Supreme Court killed it. So this is the second video about that follow-up policy. The root problem is that the rental assistance distribution is inefficient and the cash flow circle is broken for quite some time. Since the pandemic hit in March 2020, there have been 2 emergency rental assistance programs, ER1 and ER2. ER1 is $25 billion that came into effect on December 27, 2020. ER2 is $21.55 billion that came into effect on March 11, 2021. The total distributed rental assistance from ER1 as of July 31, 2021 is $5.1 billion. And ER2 has not been distributed even until now. Some of you mentioned that some landlords choose not to seek rental assistance because it comes with certain conditions. So this video documents the Supreme Court's decision to end the moratorium 2 to 3 weeks later after my first video. So that gives me a very clear signal that the government doesn't want the housing market to crash. I mean, nor does it want the housing market to crash now, but it's a different story. So in that video, I further argue that the first foreclosure wave will come because when the moratorium ended, the tenants were not paying rents, and also the landlords were behind on their mortgage payments. So some of them just choose to dump the property instead of going into foreclosure because it will hurt their credit score. Right. So that was a very important reaction from the government on what they like and dislike. And then following the end of the moratorium, the government further issued another policy which basically allows the loan modification for FHA loans from 30 years to 40 years. So that's a very important risk dilution tool to avoid any sort of housing crash. So this further affirms my forecast that the government was trying to do everything it can to prevent a major housing crash back then. And then the third video that I made was back in September 30th, 2021. So this was at the end of September. Back then, the U.S. ceiling was proposed by Yellen to be further raised because the U.S. dollar was approaching a due date. And it was very, very crucial for the government not to default on the U.S. dollar because remember, the U.S. government is borrowing money from a lot of foreign governments. And if it ever goes into default, it was going to cause a major financial tsunami on a global scale. So that was a huge deal back then. So I was explaining a little bit about how the debt ceiling was working back then. So remember that this is a very macro policy. And then there was also some discussion that the different parties are arguing whether the debt ceiling should be raised. So it was quite an argument back then. The ceiling rule helps the government keep the interest rate low and borrowing easier. But there are limits as to how much money can be printed and borrowed. Since the government needs to repay for individual and entity securities holders in benefits and repayment with interests, the first side effect is that if it runs out of money to pay for its creditors, it will set off a default. And Treasury securities will no longer be seen as a safe and risk-free investment, and its ranking in the Fitch ratings will also be affected. Creditors may sell off the Treasury securities and the interest rate will increase. The second side effect is inflation. Since dollars flood the market, commodities, energies, merchandise, real estate, and just about anything gradually get more expensive. We've seen this over the past year or so. And it makes the economic situation much more severe because of the shortage in labor and materials, and continuous disruptions in the supply chain because of the pandemic. If money is overprinted, it will eventually lead to double-digit inflation or hyperinflation, where the dollar bill is practically worth nothing and leads to permanent destruction of the economy. So why not just raise the debt ceiling in a timely manner? It's important to understand that Treasury securities have never been defaulted before. So when we forward the timeline a month later, back in last October, there was a proposal on a wealth tax. So the proposal was to impose an unrealized capital gains taxes on people owning assets over $100 million. So even if people are not selling their assets back then, you still have to pay like a 20% unrealized capital gains taxes. So that would be a game changer if it ever went into effect, right? But the Supreme Court did not approve that. So you get a reaction of what the government likes and what it doesn't like. And this is very, very clear. So those three videos, as well as the disapproval of the wealth tax, basically tells you what the government wants and what it doesn't want. And those are related to the fiscal policy and the executive order or any sort of a macro policy that doesn't have anything to do with the monetary policy. And then back in this March, that was when the Federal Reserve increased the first 25 basis points. Right. And back then, we know that the Federal Reserve was being very conservative and it wanted to start with very small increments. But we're seeing that because the inflation was not losing momentum, so it increased to 50 basis point and then 75 basis point. So from March to July, we're already seeing that the Fed funds rate increased by a total of 2.25%. Right. So this was the video back in March.
After this meeting.
It will start with 25 basis points, and the first one will start on March the 15th and 16th meeting. So probably in the interval of every 7 weeks, So in this year, it's approximately 6 to 7 rate hikes. So when we're talking about a monetary policy, the Federal Reserve is being more aggressive and also hawkish, and its rate hike decision is based on the economic indicators on a month-to-month basis. So now we're catching up to August 2022, and the government is trying to approve an act called the Inflation Reduction Act. And there are basically two parts in the act, and the first one is to fight climate change, and the second one is to reduce the healthcare cost. Personally, I think that the second part has more to do with fighting inflation. Climate change, I'm not quite sure. But one way to fund the act is to change a very important tax rule, which is called the carried interest tax. So what it basically means is that if certain investors are holding the earnings for more than 3 years, then the tax bracket will move from 37% to 20%. So that's a substantially lower tax bracket for that purpose. So based on the analysis so far, we have a very good idea of what the government likes and dislikes, and what it approves and it doesn't approve, right? So my forecast is that the carried interest tax rule will probably not be approved by the Supreme Court. So this is pretty much for today's special edition analysis, and I hope you find it useful. And I'll provide all the links to the videos that we've discussed in today's video, and also all the articles in the description down below. So make sure to check them out. In the next video, I'm going to give you an update to the regional housing market in Florida. All right, thank you so much for watching, and I'll see you on the next one.